Time now for our stock at the hour. A closer look at Macy's having the worst day going back to August of last year. This after the company said a buyout offer from Ark House and Brigade Capital wasn't, quote, actionable proposal because it doesn't have sufficient funding. Bloomberg's Abigail Doolittle joining us right now to talk a little bit more about a deal that, of course, Brigade and Ark House really pushed hard for. And, of course, Macy's got a lot of criticism for not taking it seriously early on. They eventually did take it seriously. They started their due diligence. And according to Macy's, they're saying the money just isn't there.
Yeah, the money is not there, and that's one reason that it's not a quote-unquote actionable proposal. It should be noted it was offered a day late, which is also sort of an interesting side note in terms of the seriousness of it. But what makes it interesting in terms of not being getting the financing that could really work is that Macy's offered them a ton of information, far more than you would typically need to offer to be able to get financing. So the fact that they couldn't get it with certainty is a problem. I would say that the bigger issue here, though, around this proposal was price. Because if you break down the way that these sorts of deals happen, it's usually for the real estate. So our analysts are saying that Macy's real estate is worth about $8 billion. This offer of $24.80 per share, $9 billion, not that much of a value for the actual retail. You could probably value the retail somewhere between $1 billion and greater than $3 billion. You put all of that together, it's just not worthy to them. So they're saying they're going to do the turnaround on their own. They're going to, how are they?
Oh, I gave her a look. I was like,
yes, closing the stores, on-trend fashion, greater display. Apparently, Bloomingdale's has done much better relative to display. But yeah, it's going to be a tough road. And what really stands out is this fall. It signals the degree of surprise. Investors, not analysts, but investors really thought it was going to happen, and it certainly is not.
To be fair, I don't know that much about Ark House and Brigade, to be honest. Do they have a lot of experience taking companies private?
So that they don't, and that's another factor weighing here. So Ark House, they've made investments in 2 different REITs, which is interesting because, of course, the real estate factor, preferred apartment communities and community property with the intent to buy, and then they got outbid. So they don't have that experience either. So when you put all these different pieces together, even though, to your point, Romaine, in the beginning, people were saying that Macy's should look at it a little bit harder, this offer really just didn't have it.
Well, and then now it creates the question as to what is the future of Macy's. If Ark House and Brigade aren't there to save this company, and there are no other bidders at least that we know of publicly here, that's kind of leaving the company up to its own devices. And I mean, it gets to the point about the valuation, and I think to Alex's point as well here is what exactly are we supposed to value?
Well, it's the real estate is the big value. So the real estate on its own is worth $8 billion, and then with Macy's in the stores, without, if they were quote unquote dark, it's worth $5.9 billion. The retail, it's interesting, the component itself, again, $1 billion to $3 billion. But I think the idea is, or what they're saying is, they are going to execute this turnaround themselves. They are going to restore Macy's to the brand that it once was. They're going to continue to keep Bloomingdale's. Whether or not they do it, well, that's a different story.
Because they have the Bloomberg Curie, right? They have Bloomingdale's. Like, those are the valuable parts as well.